Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Chris Dearborn, managing director on Nasdaq's market intelligence desk, for an update on technical levels to watch in the Nasdaq 100 as stocks finally get a reprieve from the sell-off that we've seen, through the last 3 weeks of September. Chris?
Yeah, absolutely. It was a real slippery slope. The index is down over 5% for the month, so it's looking like unless we have some type of insane rally, going to be down that for the month, with the last day of trading being tomorrow for September. But relative for the week, the index is kind of flat. We had a little bit of a sell-off on Monday, followed by yesterday. Even though it did rally from the lows, today is pretty solid following the GDP number, which is good. What we're looking at here for the index, really, though, is a major support level that we talked about on Monday that was revisited again yesterday and today. And today we're trading north of that, and that's a 76.4 Fibonacci retracement level on the index. So again, a lot going on here, and we'll go into that in a second when you pull the chart up. But really, it's still down to the economic data. There's no earnings going out. You've got higher oil, higher rates, higher dollar, all negatively impacting stocks. And then you have the looming shutdown coming over the next couple of days. We'll see what that brings to the markets as well. Again, that's never good. When a shutdown takes place, you're talking the last shutdown cost the U.S. GDP about $3 billion. So that could be very significant when you look forward on the macro level. Unemployment, though, we had unemployment numbers today, still showing us relatively firm unemployment. A little over 200,000 on the weekly claims, a slight uptick, and continuing claims really didn't uptick much as well. So really nothing's changed there. But looming in October, and you and I have talked about this before, right? You talk about consumer, and you talk about consumer spend, and then you talk about the loan repayments coming back for student debt. That's going to take another hit as well. So if we have student loans that have to start being repaid in October, you have a shutdown adding to $3 billion ish if it lasts, 3, 4, 5 weeks. The GDP, who's going to pick up the slack? And the consumer's always been the one to pick up the slack. Is the consumer strong enough in this environment to do that?
Right, Chris, and before we get to your chart here, I just want to make a point. Yes, student loans, we have the shutdown as well. I also want to mention the strike, right? Because it depends how long that goes on. It depends what the actual negotiation, what that's going to yield, right? What happens is, if that's going to cut into car makers' margins, guess where that cost is getting passed down to? We saw it with UPS, right? Shipping rates have went up once, they had to negotiate the union contracts there. So it feels as if the pressure, not only with inflation, but, the supply chain's getting back online. And I feel like the consumer just keeps getting ding after ding after ding with raising prices. Plus, it's $4 plus at the pump right now. So
how much can a consumer take?
Right. Well, because then you have to start, you and I were discussing this off air yesterday, they're going to have to start making those decisions where maybe I'll postpone buying a car. Perhaps I'm going to think about that discretionary spend on those, new pair of Nikes because got to put food on the table. So, and you covered the retail and consumer space, so I'm sure you're in the weeds with that. But let's pull up your chart for a moment here. Let's talk technicals. Sure. What are you watching on the Nasdaq 100?
Right. So we talked about the 76.4 retracement level on the 1 year. And that's coming from the 52-week low made last October to the 52-week high made in July. And that stands at about 14,635. We're right there now. We're trading about 14,700. The index itself opened significantly lower, but held the open at 14,530. So on a very short-term basis, the ball game right now is that 14,635 level, the 76.4 Fibonacci retracement level. If we close above it, it's a positive close. Again, if we close below it and we stay above the openness where it's still a positive close, and it'll be a green candle on the chart, but it have negative connotations for the future over the next couple of days. Support is really tight at 14,620 and then 14,335, which corresponds to the lows from yesterday. Resistance overhead is 14,880, which is the trailing 100-day moving average, then about 15,000, give or take. But really, the ball game comes down to the 76.4 Fibonacci retracement level for technical traders as well as retail. The close above will be slightly bullish, and the close below will be significantly bearish for this index.
Right. Let's take a look at the constituents here. How are they performing today?
It's 7-3 gainers to losers. Large cap tech and the Magnificent Seven are, for the most part, leading the way here. You've got Meta, AMD, Tesla, Alphabet, NVIDIA, all up well over 1%. Tesla's up over 2%. On a point basis, that's really where most of the points are coming from. But if you look on a percentage basis, there's a number of companies that are well above 3% today. Nice bear market rally, some people might call. Some have some news out, but the chip makers, very strong, especially the US based ones. There's a note out from JP Morgan today talking about Taiwan Semi and how they may be delayed in getting their production back on pace. If that's the case, the benefit is going to come to AMD, Marvel, and all the others.
All right, Chris, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.